Hi students, I am Dr. Chalaka. You know me from my classes. This is another video in my series of accounting videos. In this video, I am going to show you how to enter the values from the cash receipts journal to the T accounts. So let's get started.
Cash receipts journal, right? We did cash payments, now we are doing cash receipts. Okay. Yeah, cash receipts, right? Now you will see in these accounts, the opening balance is not given, right? So we have to first put the opening balances, right? 4.5. So normally bank is debit, right? But they are saying it's a credit. So the bank balance we have to enter on the credit side. Okay. And the balance is always first date of the month. Here it's 1st of May, right? So 1st of May, we go to the bank account, 1st of May, 1/5, right? The cross reference is balance and 900. We enter it on the credit side because it says credit in the question, right? If it doesn't say anything, it will be debit. Inventory, we know it's an asset. Assets have debit balances. Inventory 5,000, right? So go to inventory, put 5,000 on the debit side and write balance for that. 1/5 balance. Then accounts receivable 2,990. Accounts receivable is an asset. Asset also has a debit balance, right? Normally the debit balance is the same as an increase. Okay? Asset increase is debit, so balance is also debit. So accounts receivable 2,990. 1st of May 1/5 and balance. Now we are going to enter the transactions, right? Now the accounts are here now, right? All the accounts are here except inventory. Inventory is not here, but we have to have inventory because inventory goes with cost of sales, right? So first is bank. Right? First account is bank. Element is asset. That සෙනුමි මට කියන්න දැන් bank increased the decreased. මේවා දැන් ඔක්කොම මේ EFT receipts, right? EFT receipt කිව්වහම bank increased the decreased.
Increase.
Right, very good. Bank increase. So asset increase is debit, right? We know that. So that's where we are going to put this 9365, right? 9365 debit. Right. And the date is 31st of May, always last date of the month, right? For everything, it will be 31st of May. Then the second account, right, is accounts receivable, right? Now in accounts receivable, what is happening is we are getting money from accounts receivable, right? So bank increase and the other account is accounts receivable. Then සෙනුමි අපිට දැන් accounts receivable වලින් සල්ලි හම්බුනහම accounts receivable increased the decreased.
Decrease.
Very good. Decrease. Accounts receivable is an asset. එතකොට debit the credit. Asset decrease.
Credit.
Credit. Yes. Asset decrease is credit. Very good, right? 2,150. in the cash receipts journal, most of it is credit, right? Because bank is debit, most of it is credit except for cost of sales. Cost of sales goes with inventory, right? So in cost of sales is debit, inventory credit, right? Because we are selling inventory, so inventory is decreasing, just like the sales transaction. In the sales transaction, cost of sales increase debit, inventory decrease credit, right? So cost of sales is different. Everything else will normally be credits, right? So we'll leave that for the last, right? Now we'll do this one, sales, right? Sales 7,200. Now remember, sales revenue element is revenue. And revenue always increases, just like expense, right? Always increase, and revenue increase is credit always. Expense is always debit, revenues are always credit. Then we see what's there under sundries. So under sundries, we have interest revenue, right? Interest revenue is a revenue account because it says revenue here, right? So interest revenue is a revenue account, right? So we have to write the name revenue also when it comes to interest, because interest can be expense as well, right? So we have to write interest revenue, right? For sales, we don't write revenue because sales can't be anything else. It's only revenue. But interest can be expense, right? So that's why we need the word revenue there. So interest revenue is revenue, obviously, right? And revenue always increases. 15, right? Okay. Now, if you add all of this, right, you will get 9365, right? So the bank debit is equal to all these three credits, right? Cost of sales is different. Cost of sales has to be entered separately, right? So we enter cost of sales. We know cost of sales is an expense, right? And expenses only will increase, and expense increase is debit, right? Now the value we are going to get from here, right? Cost of sales 4,800, right? So we are going to put that 4,800. Now this debit account is equal to these three credit accounts, right? Now cost of sales is a debit. We need to enter inventory because without inventory it's not complete, right? Cost of sales always goes with inventory, always, right? So inventory is an asset, and this is a sale. This is a cost of sales, right? We have sales here. We have a sales column. This is the cost of that sale. So when you have a sale, inventory will decrease, right? We know that. So inventory decrease. Inventory decrease is credit. Asset decrease credit, and 4,800. So that's how we enter the sales journal, right? The bank value matches everything except cost of sales. Cost of sales we have to enter separately, right? So that's how we enter it. Now